Ladies and gentlemen, hello there. This is Christopher Aaron. It is late on September 12th, 2018, and we're going to look at what is impacting the US dollar this week. There was an important speech given by the head of the European Commission talking about some of the problems with the dollar. This is really important from the big picture perspective, so let's take a look at that. We're talking about the weakness that was seen today in the US dollar and how that impacted the precious metals. Just a quick order of business. I wanted to let you know this is going to be the last video that I publish on YouTube for several weeks. And I'm going to take a break from doing these videos. If you have been following this channel for a while, you will know that I've been making videos for about 3 years here on this channel. And the longest break that I've taken is 1 week here and there. But I'm going to take several weeks off. I have a few other projects that I'm working on, and I'm trying to devote some time to those. So I'm going to be diving into these projects, looking at some other markets and some other opportunities here. And so just know that the next video, I don't have a release date for it yet. It will be several weeks into the future. Now, if you're a premium subscriber of mine to the service, all of your content will continue as normal. So no worries there. But the free content, it'll be a few weeks until I'm back again. So thanks for your understanding about that. Let's dive right in and look at what is happening here. Talking about this news release today, this speech that was given by the head of the European Commission, Jean-Claude Juncker. And he said that this was actually quite incredible. You know, just going down here into the meat of the article a little bit, that he wants to turn the euro into a global reserve currency that could rival the US dollar. So he was giving his last State of the Union address to members of Parliament today on Wednesday. And he said, for example, that basically that it was a problem that the EU had paid for its imports in energy. 80% of its imports coming into the EU were paid in US dollars, despite the fact that only 2% of those imports came from the US. So, you know what? I mean, if I was a European, I would tend to agree with this statement. And I would say, yeah, you know, why are we being held to having to use U.S. dollars for all of these things? And this is causing this artificial pressure in support of the U.S. dollar, that if we did not have the world's reserve currency here in the United States, so much of that support to the dollar would no longer exist. So this is really significant when you think about it. These are the big picture types of things. These are the types of things that I think are going to be increasing over the next few years as we see the world start to move away from the dollar standard at some point. Now, these are sort of like the initial warning signals, some of the initial shots across the bow. I do not think that this is going to be representing anything tangible yet at this point. It's more of a rhetorical type of sentiment. So let's keep a lookout for this. And I want to bring up the charts for the dollar and for precious metals and show you exactly what's been happening here with this. So let's just look at the one-day event, and we can see the response that these various markets had to the speech today. Now, the U.S. dollar was only down a fraction of 1% today, so it wasn't all that much. Gold was up almost 1% in comparison. The U.S. stock market was flat. The gold miners finally showed a little bit of leverage today positively for the price of gold, although certainly nothing to write home about because they have been so weak over the last number of months. But this is the one day, so we can see the impact. Gold did serve as a countermeasure for the U.S. dollar on this one day. We can see this a little bit more clearly when we look at gold here. Boom, there's the speech. So adding on about $10 from the pre-speech levels. When we look at silver, you know, something of an attempt at a recovery here with silver, but we're still noticing that real lack of anything resembling leadership from silver. And you know, we were talking about that a lot last week and several weeks ago. So please keep watching over the next few weeks while I'm gone. Please keep watching these short-term comparisons between gold and silver, because if the metals are going to form a bottom and begin a new rising trend at some point in the near future, we want to see silver begin to show some leadership at some point in that. And I would say further, we really want to watch that gold to silver ratio. We want to watch that level in that 80 to 84 level. And the ratio has got to come back down below that for the precious metals to be showing any health over the near term. Otherwise, this market, I think, is setting up for a significant decline further still, even from where prices are now. So just keep that in mind. Watch this as we are going along. Please always be watching these things if you want to be properly informed about these markets. So let's bring that up. Now, I wanted to switch right into the kind of, let's call this intermediate / long-term. This is not the generational view, but we're talking the 15-year view of the U.S. dollar. And we'll bring up the key here. And we're talking about the basic, the most important thing to keep in mind right now is for all the speeches such as this, given today by the head of the European Commission, talking about moving away from the dollar, for all the problems inherent in the debt structure in the United States, right, and the artificial propping up of the system, the Federal Reserve buying bonds and whatnot. For all of that, the dollar is still in this broad rising trend. So understand where I come from here. This is the difference between understanding these fundamentals and being able to speak about them. And there's a lot of people who are real brilliant in discussing the inner workings of these fundamentals, right? And that can all be true. But the bottom line is that the market, the sum of the market, is still placing the dollar in this broad rising trend, which began at the absolute low in 2008. So it's the difference between really looking at what should be versus what is. And I often try to make that distinction just to try to hammer home this point here, that we can be right on what is happening behind the scenes, but the markets are a hugely psychological function happening here. And the markets can behave according to their own set of principles for many, many years, despite what those fundamentals might be. So it's really important to look at that as we look at this channel that's still playing out here in the dollar. Now, the big point from 2 years ago was this false breakout, at multi-decade highs, a 2-year consolidation here, false breakout, and we called that about a month after it happened. I said, guys, this is looking like it's going to form a significant reversal. That was right in here. Sure enough, we had that reversal, and now we've had a stronger bounce than I was expecting here in the U.S. dollar. I thought it would top out here at the broken resistance level here in black, the broken support level. It did not. The dollar has gotten back above that, and we're back into this previous consolidation range between 92 and 100. So the dollar is kind of in a short-term technical pattern here that is showing indecision. Short-term, let's say we're talking about the last 2 to 3 years. It's showing indecision, and I want to show you what I mean by that. So let me pull up the highlights here. If you take a look at what's been happening since the surge of 2014, you had this strong surge here, right? And then we have been seeing a series of waves, lower, higher, lower, higher, lower, right? So lower lows and higher highs forming on the dollar. Now notice, just as a point of record, this is kind of opposite of the pattern that we were seeing from 2008 to 2014. In 2008 to 2014, we were seeing a convergence. Notice how these highs were coming down and the lows were coming up, right? So there was a convergence here happening. what we see happening is now is the opposite. The highs and the lows are diverging. And so what does this look like? If you just look at this sort of a pattern here, kind of get the shape of it as these highs and lows are moving apart, we are looking at what is called, colloquially, this is called an expanding megaphone pattern. It takes its name from this type of a shape here. We're talking about the handle and then an expanding profile in both directions. And this type of pattern shows what indecision. So you're showing a market that is swinging, it's oscillating violently. Every 6 to 12 months, we're seeing these oscillations, higher, lower, higher, lower, higher. And this market is showing us it doesn't know what to do. For 6 months at a time, it looks like the dollar has seen its last gasp. It looks like the world is starting to move away from U.S. dollars. And then we have another surge, right? As, things in the United States maybe are not as bad as the market thought that it was. Or actually the debt to GDP here in the United States is actually not as high as it is in several European countries, for that matter. So maybe the dollar is not so bad off. So we're seeing a market showing indecision here for the last 2 to 3 years. That's the point of this. Now, what is the result of this pattern usually? Usually an indecision pattern is going to result in a strong move in one direction or the other. And I know now there are some people who say, you're saying anything could happen, right? It could go higher, it could go lower. Yes, but more importantly than that, it is going to be a strong move higher or lower after this pattern resolves. And knowing that there is going to be a strong and significant move, either higher or lower, is a lot more than knowing nothing at all. It's a lot more than just saying anything could happen. Okay, if it was anything, then, the market could just move sideways for another 5 or 10 years. That's not what I'm saying. That is not what this pattern calls for. This pattern does not call for a market to just move nominally higher a little bit. This pattern calls for a major breakout or a major collapse in the dollar when one of these boundaries is broken significantly. And that should be happening here over the next 6 to 12 months, I would say, give or take. Okay, so we're looking at a strong move for the dollar, and the problem with this pattern is you just simply, you cannot predict it ahead of time, except to say that we are in still a broad rising channel. Let's not forget that. Until proven otherwise, we are in a strong rising channel here. Excuse me, not a strong rising channel, kind of a moderately sloped channel with a period of indecision here. So what I'm saying is watch the lower boundary here, which right now would come in at 89 on the dollar index, and then watch the upper boundary, which would come way in here in the mid 100s. Because basically anything until then is part of this indecision pattern, and the market is just, basically this is like a bipolar market. It cannot make up its mind. It can't stick with any one thing for longer than a couple of months. And the bottom line is, this is an unhealthy market. This gets more and more unstable until something dramatic happens. Okay, so keep that in mind. That's what the technicals are showing for the dollar, even as we hear the head of the EC saying he wants to move away from the dollar. And then we have Trump coming out and saying, no one will move away from the dollar because we are the United States of America and we control the world's balance of payments. So there's these, competing forces happening in different directions here. I think this is absolutely fascinating to watch play out in real time. Let's switch over and look at gold. Now we show how gold reacted for the 1 day, but where are we here over the last several months? This is the most recent updated chart that contains all of the relevant technical points that I believe as an investor or as a trader you should be considering. Whether you're a stacker and you're looking to time your purchases better, or whether you're looking to invest in the mining sector and you want to know when is gold going to be bottoming, when could it be topping. these are the most updated, relevant technical points. But now I'm not going to give away where I think the dollar is going to be topping in this update. All of the points are shown in front of you. And what I would say is, I'll give a hint, which is that there are two important technical levels that are converging on the same price band. And that if this is the beginning of the rally that I was expecting at some point here, after this major decline that we've had, if this is the beginning of the rally, which it looks like it is, there is a specific price zone that I'm looking where I think gold will top out on this rally. Not going to give it away right now. All the information is here. I think you can figure it out. But if not, you know where to reach me. So keep this chart in mind. This will be the last updated gold chart until the next video, a few weeks from now. So thank you very much. There are some incredible gyrations happening here. You know, these sentiments. This is the thesis. This is the long-term thesis. We're seeing it set up in front of our eyes, fundamentally. We are seeing these politicians coming out and starting to reference wanting to move away from the dollar as the world's reserve currency. The dollar has been the world's reserve currency basically since after World War II. And then especially since 1971, when Nixon took the dollar off the gold standard. So we're seeing the initial rumblings that the system wants to break apart. The thing that I would always just say, this is the caution that I always give. Please be very careful about drawing conclusions based on these apparent fundamentals, because the market can move opposite you for months and years at a time based on this psychological phenomenon. The premium service that I mentioned, if you're interested, you can find on the website. This will have updates coming out even while I am gone for the next several weeks. So you get flash updates if there's anything you should know about right away. We will be covering gold, silver, the mining sector, and the US dollar, and the individual mining companies that we are investing in here as we normally do. If you would like to speak one-on-one about your situation, please know that you can reach me on the consultations tab on the website. I do not take any funds from any of the companies or any of the services that I reference. I simply look out for the best interest of individuals. So I come at this from an independent standpoint. So a few new projects in the works. I hope you have a good several weeks. A few new things are going to be coming out within the next few weeks. I really believe in this system of technical analysis, and I've been refining it over the last several years, applying it to other markets. And I think there really is something here for the individual that wants to look, this is a tough time in the precious metals. And for individuals who want to kind of step out of some of that victim mentality, you know, if you feel stuck because, I can only consider the precious metals. Well, what if the precious metals go down for a couple of years? You know, so I think it's more important, really, if you take a step back. And remember, this is someone, I believe in the precious metals from the long-term thesis. But if you take a step back and consider, what is more important? Is it more important to be right on the precious metals right now? Or is it more important to learn a set of skills and a system of analyzing the markets that you can apply to any market and make a profit or protect yourself in any market? So these are some of the things that are coming over the months ahead. Thank you for watching this video. I will see you in a few weeks. God bless.